With us now for more is Linconn Lahip, Equity Analyst of Regina Capital Development Corporation. Good seeing you, Lincoln. Welcome to the program.
Good morning, Kathy. Thanks for having me. Happy
Okay,
Friday.
so what's driving markets thus far? We've seen a higher open for a third consecutive day.
Yeah, since the trillion peso March last September 21, we've seen the market decline for 7 weeks straight, and now we are seeing a technical rebound for the past 2 days since I think the market has been really seizing the opportunity to get the prices at a much lower price right now since if we can see the PE ratio of the index right now is hovering at around 10x and the financial sectors is much more lower at around 7x, and it is something that I think the market cannot neglect right now despite the uncertainty surrounding the flood control and the some uncertainty in the country since moreover the inflation rate is quite still stable, moreover, and the GDP is still quite stable also. And yeah, so the market is really
Right, and
hunting
as you
for the
say,
buy-in
it's
right now.
cheap PE ratios. A market cannot neglect that it is a good time to buy. But does it change any of the fundamentals, though? Because it's been under a cloud of suspicion and a cloud of doubt of wanting to invest in the Philippines because of the anomalous flood control projects and the uncertainty around it.
Yes, Kathy. For that, I think that it is more of a sentiment driven rather than a fundamental, since if we are looking at the effect of the flood control on the profitability of overall market in the country, it is kind of a small impact, but rather the driving the prices down is the sentiments over the current scandal in the investigation of the flood control.
Okay, let's take a look at the fundamentals. You made a mention of inflation, and as you know, the inflation forecast range from the Bangko Sentral is between 1.5% and 2.3%. That's for September, and the official data is out on October 7. What are you expecting, and how do you think it will drive how the Monetary Board decides 2 days later?
Our house call is at around below 2% still. And I think that the BSP right now is still on a wait and see stance since they are also probably computing in their mind on the interest rate differential of the BSP and the Fed. Since if they will cut the rates further, I think the that market in the Philippines will be quite less attractive for foreign investors. So I think the BSP are keeping that in mind, but we are also looking at some circumstances if the GDP outlook would be much slower, that could probably tap the BSP to cut further.
How much slower then? I mean, I've had a conversation with the BSP governor himself about a week ago, and he did make a mention of a sharper slowdown, that it's one of two. The other soft data that he was looking at was data. And we did see the PMI for September come in below 50, which signaled contraction.
Yeah, I think the factors that we could consider in the slowing down of the GDP right now is the left and right of calamities here in the country that could slow down the GDP. So I think the BSP is that is one of the factors that the BSP are considering right now.
Okay, so if 25 bips of a rate cut comes on October 9th, how do you think the markets will act or react?
If the BSP will cut on the 9th of October, I think that this could bring the market up since I think the market is really overdue for a catalyst to drive the markets up.
Got that. So how do we position then ahead of that supposed bump up should a rate cut come?
Since the current prices are still relatively low and the market is really on a recovering side right now, I think the market participants should really seize the opportunity to buy the dividend paying stocks, since I think the credit market is still a stock pickers market. So the dividend paying stocks right now are trading at a higher trailing dividend yield. So I think the markets could really capitalize on that right now.
Got that. Thank you so much for your insights. Linconn Lahip, Equity Analyst of Regina Capital Development Corporation.